Hey everyone, welcome to StoryTrading. Got a special program for our Wednesday afternoon happy hour. After this, well, it's got Chris Hampton here for one of our contributors talking about SPAC warrants. But after that, we'll continue with just our open-ended happy hour with the recording off. In the meantime, quick disclaimer, StoryTrading is not an investment advisor. Investing in securities involves significant risk of loss. We are recording this. It'll be available for our VIP members this week, and I'll be up in social media next week. StoryTrading is a practice of understanding the market pricing through the lens of our four pillars of fundamentals, catalyst, sentiment, and technicals. We collaborate now on our WhatsApp and Zoom communities, and you can sign up for our app that's coming up at our website, storytrading.com. Actually, we're not doing VIP picks today, but you can go on our website, check out our VIP picks. And if you have a VIP pick idea, you can submit it at storytrading.com/submit-VIP. But today, we're inviting Chris Hampton here. He has presented a bunch of SPACs to us, has done also an educational video on SPACs for us. If you go to our YouTube channel, youtube.com/storytrading, you can see that video we did with Chris on SPACs. And I invited him back to educate us on SPAC warrants. I'm going to stop sharing my screen here and invite Chris to come to the floor. We've been discussing SPAC warrants in our community, and honestly, I was so confused by it. I still don't get it. So I invited him to join us today and school us on how these works. Chris, how you doing today?
Good. It is a little confusing, but I'm sure you noticed that warrants don't trade generally as you expect them to if they simply have a strike price of 11.50 and are executable that way. They tend to begin to slow down in their movement relative to the underlying equity as the equity moves more and more above 10, and especially past 20, you'll notice that they increase on a percentage basis pretty much equal to the equity. They lose all their leverage.
Let's back up just 1 second and big picture. For those who are not familiar, just in terms of SPACs, how they work. We got the units and the common shares and the warrants. If you can just give us a big picture on that first, for those who are not familiar.
SPACs IPO as a unit. That unit is one common share plus some number of warrants, or occasionally no warrants, but generally between one, if it's a lower quality SPAC, few to 1-to-1 to 1/6 of a warrant per unit for the higher quality SPACs. They can attract early investors without offering so many perks. It's the more desperate ones that have to offer a full warrant per unit. So that's one of your first signals about the quality of the SPAC you might be investing in.
Now the warrants that come with the units. So basically, it starts with the units, and then they kind of split off into common shares and warrants. And my understanding is that the standard SPAC, or the most common term, is it's a 5-year term on the warrants from the date that the merger is complete.
Yeah, that doesn't happen.
And it's an 11.50 strike price. That is
11.50 is standard.
11.50 standard. And tell me about what doesn't happen when it's at 5 years.
Okay, 11.50 is standard except for the CBRE SPAC, which had a $11 strike price.
Right.
After I think it's 3 months, the unit splits into its common shares and warrants. If it's a half warrant unit, you get for 100 units, you get your 100 shares and 50 warrants. Okay, so let's say you sell those shares and keep the warrants for the leverage. They'll trade with a lot of leverage, while you're in the low teens, but they'll start to lose leverage. And as far as that 5-year thing, so the important date is the merger. SPACs are set up to last for 1 to 3 years, and they have to affect a merger in that period. Once that merger happens, the clock starts ticking on the warrants. If really, you just have to read, if you're holding these warrants past the merger, you have to read the warrant agreement, because there are going to be terms that are important and variable between different SPACs.
So just say again, to be clear for those numbers, the warrant at 1150 gives the warrant holder the right to purchase the stock at 1150. Now, on the surface, that just sounds, to me, it just sounds like a stock option. It sounds like a leap. It sounds like a call option.
If it was that simple, that would be the case.
Right. That sounds like a call option with a 5-year expiration date. So I'll give you an example. I actually, for CFVI, that's this warrant, Cantor Fitzgerald SPAC that's trying to merge with, what do you call it? That Rumble, right?
Yes.
So I looked it up. I went into the SEC filing and I read what I had expected. It says, I'll read it out to everyone. It says, each whole warrant entitles the holder to purchase 1 share of Class A common stock at a price of $11.50. Each warrant will become exercisable on the later of 30 days after the completion of the initial business. Oh, that's another thing you have to worry about, is when it's exercisable. So, but this is pretty standard too, I think. It's the later of 30 days after the merger.
What was the ticker symbol again?
CFVI.
Okay.
Yeah. So it says they're exercisable on the later of 30 days after the completion of the merger, or in this case, February 23rd, 2020, which is the 1-year anniversary of the IPO of the SPAC, right? And then it says, and it will expire 5 years after the merger, which they call the completion of the initial business combination, right? So I read that and it looks pretty straightforward to me, like this is a long-term call option, but you're saying that's not necessarily the case.
Not at all. Do you have that prospectus open?
Oh.
Okay, well, I do. And if you do a search...
can you share your screen?
Well, really, well, if you do a search for cashless, let me see if I can, okay, I can try to share this. Share screen. All right, can you see that?
Yep.
This is the CFVI prospectus, and I just did a random search for the term cashless because there are other terms for the warrant, and the most important one is cashless redemption. Okay. And you can see here, these are private placement units. That isn't it. Here it states that certain circumstances where they're required to allow holders to exercise their warrants on a cashless basis. The important thing is if they have the option of forcing holders to exercise on a cashless basis.
Yeah, this is all totally over my head. So
this is really important with warrants, and it really determines the price they trade at. You actually found the chart that determines the price during cashless exercise for warrants.
What is a cashless exercise?
Instead of you paying $11.50 and getting a share, you turn in your warrant and you get a portion of a share for that warrant, and you don't have to give any cash. So instead of paying $11.50 and getting a whole share, you pay nothing, and if the stock is trading 18 or over, you get about 1/3 of a share.
Oh wait, 18 or over?
Yes.
Where are you getting that number?
That's standard for these exercises, and it's from that chart you posted. And I'm trying to find it in here.
Someone else posted the chart in the room because I really don't understand that chart. So,
Yeah,
so you're
it's not
saying
easy to
that
understand.
cashless, forced cashless redemptions is
Yeah.
standard? It's standard.
Yes.
Uh-huh.
It happened like the Lucid merger. They forced
Okay.
cashless redemption on all the warrant holders.
They force the cashless. And when do they typically do that? Like soon after the merger?
After the merger. Yes.
So soon after the merger, is it typical to force the cashless redemption?
That is something I've been trying to figure out. I spent a good amount of time trying to figure out back when I was more involved in SPACs last year. I was talking to people that made their living trading SPACs, and I really couldn't get a good idea of how often it happens. I mean, the thing is, there's so many SPACs in existence right now versus SPACs that existed before. It's like we don't have much of a pool to judge with. It's like an entirely new world. But from what I've been able to see, definitely most end up forcing cashless redemption.
Tom has a comment in the chat that the terms on this may be in the latest S1. Says must read the S1 to get details on warrants and SPAC. It's common they get amended, so you need to read the latest. Wouldn't be typical unless share price is over 18. You found it? Okay.
Our management will have the option to require all holders to do so on an exercise on a cashless basis.
We call the warrants for redemption as described above. Okay.
And
so it's not really your
a
option.
Choice. No.
Yeah. So
because your other option is getting a penny.
Okay. So this is like a big awakening right here. This line right here, I had to see it in black and white. Thank you for showing it. This is basically the statement in this SEC filing that changes your frame of thinking. This is not a call option. This is not it's not your option, right? No. It's the company's option. Apparently, it's not your option. So that makes it a lot different than a call option with a 5-year expiration date. Wow, that's interesting. So now that I saw it, I believe it. I didn't believe it before because it seemed kind of crazy. So, and that paragraph you just showed is standard across all warrants. Is it possible that any SPACs don't have that?
Yes, you have to check.
It's possible a SPAC says we're not going to force it and we're going to treat this like a long-term leap. That's possible?
And I've seen some SPAC warrants trade as if cashless redemption probably was not going to happen.
And that's because they know that management wouldn't do it, or because it's not in the document?
I've seen warrants switch from trading as if cashless redemption is in their future to as if it's not. And it's always happened post-merger.
And is that because of a change in some filing that they...
It's never been one I held.
Mm-hmm.
And I haven't kept track to see how it turned out. But it is because for some reason, traders expect the warrants to redeem normally on a cash basis.
For some reason. So you're saying that could be either because they kind of have information from management that they're not going to do it, or it's possible they amended the terms to say we're not going to do it. Is that possible?
It's possible they just believe the company's going to need the money.
Oh, I see. The company's going to need the money. That's a good point you brought up versus forcing a cashless. So I guess a company would want to force a cashless redemption because it's less dilution.
Exactly.
Right? Less dilution. And if they need the money, then maybe they're not going to force a cashless redemption. They'll welcome in the $11.50 per share as people cash out on these warrants. Is that right?
Yeah, that's a big cash injection.
I see. Okay. And where is this about the $18?
That's what I'm trying to find for you.
Huh.
Yeah, there's a lot of text in these things.
That's insane.
Yeah.
That's really crazy that they make it this complicated.
Yeah.
Wow. And so you're looking somewhere. So you're looking for an 18, and there's some chart. I could pull it up from WhatsApp groups, but
it'll be in the warrant agreement, and that would be a better way to search for this. Maybe searching.
Oh, look at that.
See, there are all these terms. Right here's one. We have the ability to redeem outstanding warrants at any time after they become exercisable post-merger at a price of $1 per warrant.
So they can only they can only force the cashless redemption if it's 18 or over? Is that we have the ability to?
No, this is something totally different.
Totally different.
This is just they can give a 30-day. Yeah, this you just got to read this stuff. They can give you 30-day notice that in 30 days we're redeeming your warrants for a penny. And if you miss that notice and hold on to them for that 30 days, you end up losing the warrants and getting a penny.
Whoa, slow down. Go back up. Are you serious?
Yeah.
You may redeem your unexpired warrants prior to their exercise at a time that is. We have the ability to redeem outstanding warrants at any time after they become exercisable and part of their at a price of a penny, right? Yeah. Equals or exceeds 18. How would wait? It says
this is
20 days
different.
notice.
This is different than cashless. This is just another way they screw us.
I mean, would that be like a huge press release and everyone would know about it? Or this
no.
is like some...
No?
You wouldn't know about this 30-day?
It would be a filing.
Wait, is it 30?
It'd be a filing.
But do they give you warning?
Well, that filing 30 days in advance.
It's 30 days in advance.
Yeah.
Where does it say that? It's 30 days in advance.
Well, that's typical.
Okay.
For any 20 days when the 30-day.
Shoot. So what would happen?
Proper notice of such redemption on the third trading day.
Oh my gosh, that's insane. So then you have 30 days. You can redeem it during that time for its fair value, right? At $11.50. You can go buy, if the stock's at like $20, you could go buy the stock for $11.50, right? And sell it at 20 during that time before.
There's more to this. I mean, I chose CFVI because you mentioned it, and this is the first time I'm looking at these terms.
Oh, okay. All right. You want to pull one up? You're more familiar
typical
with?
Here, it would be 30 days notice, but I don't see the length of that notice here.
Okay.
But typical is 30 days.
Wow, this is something.
Yeah.
So, okay.
Yeah.
All right. So a lot to know here.
So yeah, that's just one thing. I mean, generally after merger, warrants get a little more dangerous. You got to really start paying attention. You got to know the warrant agreement and pay attention to filings.
So there's two things that can happen after a merger. Either they can basically make them non-existent and say you get a penny,
yeah.
or they could do a cashless force a cashless exercise.
Yes.
That only happen typically if the stock is trading at 18 or over.
No.
The forced cashless redemption.
Okay. Well, one thing generally prior merger, all SPAC warrants trade, from what I've seen, as if they will be redeemed cashless eventually. So that doesn't get worse after the merger. Sometimes it does get better. Dang it, I'm trying to find that chart. All right. With the cashless, they keep their leverage. The warrants have strong leverage around the strike price, and they slowly lose it until 18, when they start trading basically as a mini share. It's just trading like they're a third of a common share.
And why does that happen after 18?
Because of the cashless redemption and the redemption terms, and that the number of shares you get per warrant changes as the common stock price changes. You actually get fewer when the price is lower. But of course, with an $11.50 redemption at $12, your warrant with normal cash redemption would only have an intrinsic value of 50 cents. And that, we got to find this chart.
Okay, there's that chart. Well, I can pull up the chart that was shared in our community.
Yeah.
But is the chart different for each?
No, it's generally exactly the same, except for CBRE.
CBRE is different.
Yeah,
Okay.
they have a little better terms. Right. Can we switch to your screen when you pull that up?
Yeah, hold on.
Or I can try to find it.
All right, here's the chart. And you're saying this chart is standard across all warrants?
Yes.
Oh, interesting. You know, I don't know that a lot of people know about this, even like sophisticated. I was just reading an article over the weekend about the death spiral financing for DWAC, which we covered somewhere else.
That's right.
And it was a very long, detailed article going into the nitty gritty of all of the, all of the terms of the financing, obviously by someone who's very intelligent and experienced in this stuff. And then he was coming to the warrants and talking about, why they're priced where they are. And he didn't say a thing about any of this. He just did the math and is like, DWAC's at $50, 50 minus 1150. Is whatever 38.50. The warrants should be at 38.50, but they're at. But he was saying this, but they're at like 17 because there's an expectation that there's going to be this death spiral financing.
No.
So this was someone who was like really, really knowledgeable, and this person thought what I was thinking. So I think like this chart, I'm not sure many people know about this.
Yeah, this chart is important. Luckily, it's the same every time, or really SPACs would be a true nightmare. Bottom line, SPACs around strike price trade about the same, cash or cashless. But that warrant, that leverage disappears as you head towards 18, and then past 18, it's pretty much gone.
Can you explain what I'm looking at? 0 months. What does that mean?
We lost your screen.
Oops. I'm sorry. 0 months.
0 months. That's 0 months till that 5-year expiration.
That's the merger date. 0 months is
no. That's the expiration of the warrants.
Which okay.
None of us will ever see. We'll get to that. So let's say.
Yeah. Go ahead.
Okay, let's say the company merged at 42 months, and then at 39 months, they said, we're redeeming all the warrants on a cashless basis.
Wait, slow down. What do you mean they merged at 42 months?
Okay, at the 39-month mark, let's just say after the SPAC has been trading for 39 months, they merge.
What? Don't these SPACs usually have like a life of like a year or something to find a target?
Actually, 2 years, that's right. So let's make, I'm sorry. So after 2 years, which is 24 minus 60, so that's 36. So yeah, at the 39-month mark in this chart, they declare their merger, which is about 1 3/4 years after they launched. They merge. They merge.
I'm a little confused. Are you sure this is not relating to the 5-year period after the merger is finished?
No, it's 5-year from is the warrants expire 5 years after merger or 5 years after issuance?
I've been seeing 5 years after merger.
That's possible. That's nuts. Okay.
Yeah.
Well, let's just say that makes it easy. So the SPAC merges, and then 1 month later, they say we're redeeming all the warrants. That's really weird. Pretty much they won't do that unless it's trading over 18. But let's say it's trading at 15. That means for every warrant you have, you'll get 0.337 shares.
So we're looking right here. So $15. Yeah. So there's 57 months left, right?
Right after the merger.
So 3 months later.
Yeah.
Maybe 3 months. Yeah. Right. So 3 months after the merger, the stock's at 15, and they're saying, sorry, you don't get
they'll
one
say
share.
sorry. They're never going to say sorry.
No, but I mean, I just read it in black and white. It says for each warrant, you could buy a share. And this is saying, no, for each warrant, you only are going to get 0.337 shares.
Right. The good news is you don't have to give any cash,
The hell?
but you're only going to get.
Oh, that's right. You don't have to. I forgot about this.
You
So
know,
this is a
third
cashless.
share.
So this chart refers to the cashless redemption only.
Right.
So can I jump in with a question here? So if the warrant was $11.50 and the stock was $15, then the value of that should be $3.50. Is that right?
If you're going to actually redeem the warrant, but we're saying the company has the option to force a cashless redemption.
Well, what I'm going to ask then is that 1/3 of a share at $15 is $5. So the cashless redemption would actually be better in that case, wouldn't it?
And they would never do it then.
Yeah, that's what I'm saying. So it would never actually happen in that case.
Yeah.
It'll only happen when the
1/3
people whip out the
share.
calculator and then say, "Oh, it's not good," right?
Yeah, it's only happens above 18.
Okay.
Right. Okay. So okay, and that's why it only happens above 18, because it doesn't make sense for them to do. So why are even these numbers here?
Oh, they made this chart, you know. So yeah, that's how it works. Because
they made this
so much
chart.
risk delta.
Yeah.
Yeah. I guess this computer using Black-Scholes or something, but yeah. So you do the math, over 18, you get. So your warrant's worth about $6.50. And it's also worth about 1/3 a share when shares are 18. So, which is $6.
Oh, wait, at 18, I didn't get this. At $18, you get 1/3 of a share. So is that, how do you even calculate that? 18 times 0.365, right?
Yeah, which isn't exactly 1/3.
Right. Okay. So at 18, the warrant should be worth $6.57.
Well, there you go. And common is $6.50 over the strike price.
Right. So then, but what happens after that? I'd like to see the chart of, because under 18, this really doesn't matter.
Right. Over 18, that percentage stays the same. You're always getting 0.365 share per warrant.
Yeah, I mean, right. And it goes down over time to 0.361, not a big deal. But the chart that we really need to see, I think, but let me just make clear, what we're looking at for below 18 really will never come into play, right?
Right.
So, okay. So it's like there for no, there's there for no reason. I think what I'd like to see is a chart of 18 and over, basically like what can you expect the warrant price to be trading at?
$30 would be
yeah, let's do $30. Right? So
$18.50. You would expect the warrant to be worth $18.50.
But it's actually $10.95. I just did it. Yeah.
Right.
So at $30, that's the number we really got to be looking at, right?
Yeah.
So I'm thinking, you know, when we're trading these, that's what I'm trying to figure out now, is when we're trading warrants, and let's say it's before the merger is complete, right? So you're trading warrants before the merger is complete.
Right.
Maybe we should have a chart next to us, taped up, you know, on the wall in our rooms or office or whatever, that basically does the math for you, right? That, you know, $30 is $10.95 and $50 is 50 times.
Yeah, it's kind of handy.
$50 should be $18. Oh, now the DWAC warrant makes sense.
Right.
Oh, now I see. So everyone's wrong about the reason why those DWAC warrants.
This is why.
This is crazy. All right. So DWAC warrants right now are at 1647. Okay, let's do this. Let's see how closely this correlates now. So DWAC warrants are at 1647. The stock's at 52.93. So 52.93 times 0.365 is 19. So this one's still at a discount. It's 1932 according to what this chart should be at. 1932, but it's again trading at 1647 instead of 1932. So what's that about? Why do you think DWAC warrants are trading at a discount to the calculated price?
Okay, what's the common, hold on, let me.
I mean, this is maybe an unusual one because it's the Trump one with maybe more risk.
53 versus 16.75. What's 53 times 0.36? I bet it's pretty close to 16. 19
times 0.36.
What is that?
Yeah, 0.365 versus 0.36. That's not going to make a big difference in the calculation.
I better do it right. Let's see.
0.365. That's the number to remember. It's 0.365 is more important than 1150. So forget about taking the share price minus 1150. Forget about that. You're better off taking the share price and multiplying by 0.365.
Yeah.
This is getting.
Yeah, 19.4 is where the warrants should be if they're priced for cashless. They might be a little underpriced. I don't know. But, you got to read the terms. I imagine there are extra punitive terms in the DWAC warrant agreement.
Yeah. And let's see. That might be true. I'm trying this other one.
I'm sure I would bet the DWAC warrant agreement sets new standards for punitive.
Yeah. Okay, and just as a reminder, you can't really, if it's under 18, you don't use that formula, right? If the stock is under 18, you go minus 1150, and that should give you, right? That should give you closer to what the market price should be.
I mean, there's a gradual transition. You should be aware of the cashless number. But in general, around the strike price, you have full leverage, and that leverage slowly diminishes to 0 at about 18.5.
Right, it's a smoother transition. I guess it's not like 18, it just changes.
Right.
But
Yeah. And so, warrants are generally a good way to trade SPACs when they're priced around $1 or $2. Once they get up towards $5, you're better off just owning the common or options. That's bottom line.
The further it is below 18, right, the more you want to rely on 18 minus 1150. And the closer it gets to 18 or over 18, the more you want to multiply it by 0.365. Is that right?
No, it's not. I mean, that cashless chart, it'll pretty much tell you how the warrants are going to trade. But they have more room for torque and premium when they're at strike price.
Jared, do you get that?
Can you say that last sentence again?
There's generally more torque and more volatility premium around strike price.
What is torque? I haven't heard that term before.
I guess that's personal vernacular. More leverage versus movements in the share price, underlying share price.
So do you mean that the person that makes the purchase can get better use of leverage? Is that what you're saying?
Yes.
Yes, now I understand it.
You get better leverage, more leverage, the lower price the warrant is.
Yeah, that makes sense, because the same thing would be true for an option then, right?
Yeah, and out of the money, and a call option has more leverage or torque than at the money.
Does that make sense, Ben?
Well, I just did the math, so I get it. I mean, I don't understand it yet because the whole concept is crazy to me. But I just took something over 18, and let's say if a stock goes from 30 to 50, for example, that's a 67% move. And the warrants, according to this table, will go from 1095 to 1825, also 67% move. So what you've been saying is correct. You lose your leverage completely. It's not just you get less leverage, you get no leverage
Right.
once you hit 18.
You've got a mini
Right.
share.
Yeah, you get no leverage at 18. So, you know, if a stock, if a SPAC is volatile in that, you know, under 18, you may want to be trading the warrants. If you're trying to buy low, sell high, right? You want to trade the warrants if it's under 18.
When I was trading a lot of SPACs, I would see the warrant price hit $4 when the underlying was around 13.
Why so high? This makes sense to me.
13.
Is it 13 minus 1150?
Right.
It's just $1.50, and I've been seeing that also.
13. Yeah, that's really a good price to sell warrants if you see that, but you do see it a lot. I'd say, so fair price would be $6, about $6 at 18.
Yeah, I've been trying to trade CFVI warrants, and yeah, I've been having a hard time figuring out the calculation.
Yeah,
but I do notice.
Well, if they're $4 at 13, to go up to their max leverage at about 6.5 is over a 50% increase. So you still get 50% movement on those warrants in the move from 13 to 18.
Mm-hmm.
While the common only gets with about 30% appreciation between 13 and 18, whatever that difference is. A little more than that, 40%.
Checking out those DWAC warrants, on the day we were trading it, DWAC went to 175, and I remember someone in our community selling those warrants in the 70s. Just did the math on that, and the highest it should have gone was 64, but I think this was while it was halted. That's why. Yeah, I think DWAC warrants were still trading when DWAC was halted after in the 150s, whatever. Okay, it's starting to make more sense now. This 0.365 is helping. So you lose your leverage after 650. So 18, the commons are 18, the warrants go to 650. So probably, you know, once, and you're saying 4, you know, once you hit 4 and you move towards 650, that's like a good time to transition out of warrants and into the common.
Yeah, I mean, if you buy your warrants at 4, it'll still appreciate a little over 50% on the road to 18.
Yeah, which is still pretty good leverage.
Yeah, of course, maybe the stock won't go to 18.
Right.
Well, common, but that's the idea behind the pricing. In the headier SPAC days, I'm imagining you won't see that so often now. Probably closer to 3 or even under that when the stock's at 13.
What was the difference? What changed in the SPAC, in the old SPAC?
Well, the IV essentially, people were willing to pay a higher premium for that extra leverage, almost to the point where leverage disappears.
Mm-hmm. And why were they willing to do that?
Because they assumed everything was going over 18.
Oh, I see. Right. So it was basically trading more like what you'd expect the call option to trade at. it's a premium, right, for that time value. That
yeah, they use the same formulas, more or less. I think they more often use a Monte Carlo simulation. I don't think we want to get into that, but yeah, basically these have a lot of similarities to options. They're the same basic inputs to determine the value. Sort of, except completely not, because
no,
the cashless exchange
yeah, I know. I don't know about that. I think I got a little handy dandy little chart on my, it's scribbled here, but
Yeah.
you know, I'll get it, I'll make it look nicer and I'll put it up on my wall. But under 18, I want to subtract 1150 from it. Over 18, I want to multiply by 0.365. 650 at that point, you're not getting any leverage anymore. Right. So the point is, you want to try to buy these warrants in the $1 to $2 range and sell them in the $3 to $4 range, and
or four to five, maybe, if you
think the stock, if you're bullish on the stock and you think it's heading to 18, right, you still get leverage to play that until 650. That's right. Okay, that's starting to make a lot more sense. All right.
Yeah.
Cool. And any other things you want to share about this?
Read the warrant agreement. Can I just emphasize that one more time?
Oh man, I don't know how you would. I mean, it's crazy. I guess for those who can understand it, go and read the warrant agreement.
Yeah, you've got to read at least one, and then you can kind of scan the future ones for the wonky parts.
Okay, all
right.
The
parts that don't look right.
That's helpful. All right. But at least these, I think the high level can help a lot of people understand what's going on after 18. Plus, the other thing you got to be aware of is the risk after the merger is complete, that they could give you some amount of notice. We don't even know how many days, and say that if you don't redeem your warrants, we're going to basically nullify them.
Yeah, you might want to, I mean, a lot of us, we get alerts on our trading platform for filings. It would actually be a good idea to call your broker and verify that they'll be sending you alert for that issue on all filings.
Yeah.
And if they don't, then set up an automatic alert directly with Edgar or some other website. They'll email it to you. Either that or check every day, or at least every Monday.
Yeah. Well, I'm sure if it's something, also, if you're part of a community like StoryTrading and it's a popular stock, you know, I'm sure you'll hear from the community about it.
I'm not.
What's that?
I don't know. I mean, how many people on StoryTrading really checking Edgar every week?
Yeah, I think they are, for the most
really?
popular. Yeah,
okay,
of course. Good. The filings, I'm sure. Yeah, we're not missing a filing for SMSI or DWAC or anything like that. I don't think so. But no, that's good to know. All right, anything else you wanted to add?
That's it.
I know, like, now that I understand this, maybe I can understand your thesis a little better for CBAH.
Yes.
You're saying they have like better terms or something. What's the difference there?
CBAH, it's no longer CBAH. It's merged and it has the new symbol AMPS. But
AMPS. Oh, that's
the warrants are still trading, and they have an $11 strike price.
Okay.
Which, when you've got when it did have a $10 floor, is a big difference. Not only is the strike price 0.5 lower, there's only $1 of risk area where the warrant potentially has zero value instead of $1.50.
Can you say the ticker again, the new ticker?
AMPS, amps, like the electrical term.
Okay, why am I not seeing it?
It's new.
Yeah,
okay.
It's definitely trading though. AMPS.
Yeah.
Okay, I see it now. I see it.
But that doesn't seem like a huge difference to me. Can you explain why it's so advantageous for? Are there any other terms that are good besides this 1150 and 11? Are they still doing the cashless?
With the warrants, pretty much the same. But I mean, considering the floor for SPACs pre-merger is $10. That means the strike price for all other SPAC warrants is 50% higher above the floor from CBH.
Jared, to get that?
Sorry, I keep asking this. Can you say that one more time? I just needed to like gel in my brain.
With a warrant strike price of $11 versus $11.50 normally.
Yes.
And considering that SPACs have a floor with the redemption price of $10.
Yes.
The $11 warrant, the $11.50 warrant has 50% more risk area where it's worthless.
Yes, that makes sense.
Mm-hmm.
Yeah, because if the stock only got to $11.19, then the $11 warrant would still have some value versus the $11.50 one would be worthless.
Yes.
Oh, okay.
And if you move just move that, it's kind of like having a $1 option versus a $1.50 call option.
Mm-hmm.
You can imagine how different the value they would trade, how different the pricing would be.
Yeah, but this stock is $9 right now, right?
Well, is it? It's
$9.50.
Wow. Yeah, it's had a couple bad days, and it's post-merger, so post-redemption, the $10 floor no longer holds.
So that's what I was actually kind of curious about. So since there's no more floor, how good of a deal is it buying it right now?
I would say if I was going to buy it, I'd buy the call options because
That's what I was
trading.
That's what I was going to say. Yeah. So this isn't actually an example of something for us to buy now. This is an example of like what might have been a good strategy to buy like a few weeks ago.
Yep.
Okay, that makes sense. Yeah. That clears it up.
Although interestingly, the warrants are still priced at $2.25.
Okay. Yeah, people are really they're very optimistic on this one.
Yeah.
That seems like a pretty, richly priced warrant.
It is.
Oh.
And if I was interested in selling this, I would sell them right now in a second.
Right.
But I like this company a lot.
Okay. All right.
I know this isn't exactly what you're supposed to be talking about, but how would you compare this stock to like Wallbox or some of these other ones?
There are 3 SPACs that have the sale structure, shareholder aligned shares. In those, instead of having founder shares or promoter shares where the founders just get a ton of free shares, they only get shares as a reward as the stock appreciates year by year.
Okay.
The SPAC is structured much differently from your typical SPAC. It's structured in a way that's much more advantageous to shareholders.
Okay, that makes sense. Thanks.
All right, Chris, we're going to, well, for those of you who want to hang on, we'll hang on a little bit and have a casual continued chat. But for everyone else, just want to let people know a couple of things here. Chris, thank you so much for that presentation.
My pleasure.
Definitely learned a lot over there. Yeah, you could go to our website, check out our future events coming up. We got the Ideno CEO coming up in a few weeks, and a few other CEOs we're trying to get onto our schedule. Make sure to follow us on YouTube and Twitter, just at StoryTrading.com. And we will see you next time. We're moving on to a non-recorded session here for our VIP members. Thank you very much.